Oh, today on the show we have Elisabeth Iszauk. Elisabeth is an investor with Montauk Capital, who, on their website, says that they are investing in the electron economy. That is a term that I had not seen outside of their website. If you're familiar with this show, you know that we use the term climate tech. We've discussed on this show a lot of different ways to refer to the industry: green tech, nature tech, all of these different things. And in the episode, Elisabeth is specific about the fact that they do not use the term climate tech. They use the term electron economy because for them, it creates an opportunity with their thesis to invest in a lot of interesting technologies across a ton of different domains that all contribute to the generation and transport of electrons. So that was the initial reason why this podcast came together. We ended up talking about a ton of different things, including going deep on geothermal, because Elisabeth has specific experience not only studying and working with companies, but actually doing research at Montauk, identifying white space in the geothermal industry, and then using the Montauk capabilities to construct a founding team, give them an initial investment, and effectively launch a geothermal company. So that was extremely interesting to talk to her about. We get into a lot of different things, very educational for me. I know it will be for you as well. Thank you as always to our sponsors, Clean Tech Growth Lab. If you're looking to grow in clean tech, they're the people to do it with, and the producers of this podcast, Craze and Friends. And with that, I give you Elisabeth. Oh, welcome to another episode of The Grove. Shout out to our sponsors mentioned just before this. But without them, it would not be possible to interview awesome people doing awesome things like Elisabeth. Welcome.
Thanks for having me.
What is going on? Before we get into a conversation about something you've said that is all over what I can read about Montauk Capital, which is the electron economy. Before we get into that, could you give a brief introduction of yourself and what you're building?
Yeah, of course. Yeah, thanks again for having me. As Blake mentioned, I'm Elisabeth. I started my career in energy. So started as a strategy consultant at Accenture, was based in New York for a few years, was working exclusively with utilities and energy retailers on different types of grid decarbonization solutions. So that was really my first lens into the complexity of our current energy system. And I also really grew an appreciation for it and started to have some ideas of how it could be optimized as well. After a few years in consulting, I started to look into the world of VC and ended up landing a role at Montauk Capital in Berlin. So moved there for a couple of years, focused really investing across everything within climate. I would say a bit more on the deep tech hardware side of things. Definitely loved that role, loved investing at seed and Series A, and felt very closely aligned with an early stage investing role. But eventually missed New York, was very grateful for my time in Berlin and across Europe and all the connections I made, but it was definitely time to come back. So I moved back to New York last November, joined Montauk Capital shortly after that, after meeting the entire team, and felt really excited to be part of what they were building.
So was there always a narrative in your life around climate or deep tech, or what was it that happened that sent you in this direction?
Yeah, I'd say definitely a narrative around more technical problems. I was definitely always someone who loved STEM and science and engineering. That was definitely always my biggest passion, I would say. Ended up studying biology and biomedical engineering in college, worked in a variety of labs, both academic and industry labs. Ultimately realized I was a bit too social likely to continue doing that long term. Wanted to do something with a bit more people involvement, I would say, and also something moving faster pace. So I would say that was one realization. And most of my research was also focused on biomedical and biochemistry applications, more in a health landscape, not as much climate. And it was actually one of my professors in college who was a biomedical engineering professor who used an entire lecture to tell us about the IPCC's latest report on climate change. He explained the severity of climate change and explained to us why, if he knew more about the state of climate when he was our age, he would have actually pursued a career in it. And that was really, and it was also a unique class because he was actually an ICU doctor, and the whole class was telling us current problems in the ICU. He was an attending doctor, so really the head of his department. And he used the entire class, instead of having us figure out as biomedical engineers another problem that he was working on to present a solution. He used the entire class just to talk about climate and why, instead of being at the top of his field, he would have done something else. So that was really poignant to me and made me really reconsider what I wanted to do and made me learn a lot more about this topic, I would say.
Shout out to that professor.
Yeah, he's a special one. So yeah, I'd say it was kind of those two realizations, like probably from a research perspective, like I'm a bit too social to enjoy doing this long term.
Sure.
And I want to do something in climate. So started to think about what else was possible, and ended up realizing, did not know what consulting was at the time, but ended up realizing that I could specifically work on the utility strategy team and work on different types of grid problems, which seemed like a good first step to do something still connected to the physical world, which I've typically felt a bit more strongly about.
Nice.
And do something touching climate / learn about business things more
Great.
broadly.
Cool. So with so then you started on this journey in Germany. You'd say that was the first exposure to investing.
Yes, I did. During my last roughly, I'd say 6 or so months, while I was at Accenture, I did have the opportunity to do some part-time, like one-off work with a firm called Atypical Ventures. So I did that in New York for a bit, worked mostly with an amazing principal who kind of really helped me confirm that this was the type of work that I would enjoy doing and wanted to do something like that full time. So I'd say that was my first kind of confirmation, like, yes, this is as exciting to me as I envisioned it to be. And then, came across the role in Germany. I have way more family in Germany than I do in the US. I'm half German, so it made a lot of sense to try and move there at some point.
So then between so I guess I'll stay with that. Between when you had started with your exposure to investing, with your time in Germany and then your time back in New York, what has changed as far as your approach and your understanding of what it means to invest in climate?
Yeah, I mean, I'd say the state of the world has changed quite a lot, obviously. I think when I started investing in Berlin, we could look at really everything across climate. We could look at things that touched carbon markets. We could look at really a variety of technologies, including ag tech as well. And I'd say those things have really faced significantly more headwinds throughout my time investing in Berlin. And then definitely when I moved back to New York. And I think I view the lens of how I can do something to invest in climate quite differently, in the sense that I don't view it as specifically a climate problem. I view it more as really a true financial problem, and what's the best way we can kind of approach reindustrialization more broadly so that it's better financial impacts, which ultimately are also more sustainable, more efficient solutions, lower cost solutions, that as a result of being those other characteristics, they will also be more sustainable.
So you're saying that specifically that super financial attention or focus wasn't there at the beginning?
It definitely was there at the beginning. I think it's always, I mean, as a financial VC investor, it's always the thing that's at the forefront. But I'd say really the key difference is making sure you're not tacking on other, I would say, like green benefits as a really core benefit to assess within the business. I think it could be a side benefit, but it can't be the core piece you're assessing, and you need to be investing in markets where it already exists today. I don't think, especially in the US with our current regulatory landscape, I don't think you can bet on the buildup of a carbon market, for example. We want to make sure we're investing within the current financial markets.
Cool. So then right before we get back to Montauk, do you personally have anything that excites you? Any space, any technology that, in like invested in or not, or something that you might have just like read on LinkedIn or something?
Yeah.
Anything that just comes to mind is exciting for you.
Geothermal, for sure.
Well, why?
I think it's always been, so I feel like I first started learning a lot about geothermal while I was at Extantia, because prior to me joining, they'd already invested in a company called GA Drilling. And the more I learned about geothermal as a topic, and because of my natural interest, just started to be the one to really assess most of the new geothermal companies that were coming up as potential investment targets, both in terms of power production and heating and cooling. It was just, the more I learned, it was kind of crazy to me. This was probably 3-4 years ago. Crazy to me that this was not something that was further progressed. It really felt like a no-brainer, especially in the US. And in terms of EGS technology, which is largely just fracking, like this is such a clear way to use the immense talent and engineering aptitude of the oil and gas workforce, but apply it instead of drilling for oil, drilling for heat. So it's really, and it's, if you look at the geothermal companies today, the makeup of those teams is largely oil and gas. So to me, it's such a clear way for that workforce to still use their same skill set that we really so desperately need in geothermal, but for a clean technology. And I mean, if you look at Fervo now, it's obviously a different state than when I first became interested in geothermal. They've really opened the market in a way that has not been done before for everyone else, both from a technical and commercial standpoint. But yeah, it would seem like such a no-brainer that it was shocking to me that this was not more scaled up, but now we're really seeing that change.
Well, very cool. So I guess just quick off of that, for geothermal, how much land do you need? Like, where are these deployments able to happen, and how far? Because I've read about, you know, like small scale people using it for their homes, for example, or at least similar technology for their homes. But what's the extent of industrial applications? Like, where, you know, would you be able to have geothermal heat funneled into Manhattan somehow?
Yeah, so there's a lot of, so there's different, you're referencing a bit different types of geothermal. So if it's at someone's house, like a residential use case, that'll be for heating and cooling. There's a lot of great companies working on that, like Dig Energy, for example. That can be on a much smaller footprint in someone's backyard. You don't need to drill as deep to access that, and you're connecting to a ground source heat pump to access that heat and cooling. And then there's power production use cases that I would say, from a venture investing perspective, I'm a bit more excited about, and have spent a lot of time on at Montauk, actually building a geothermal company, which I'm happy to talk through later. But there's key areas where that, especially in the US, where the natural characteristics of the earth are really best suited for EGS in particular, especially along the West. But the idea with these next generation types of geothermal, including enhanced geothermal systems, EGS, advanced geothermal systems, AGS, is that in theory, you could drill anywhere. If you drill deep enough, you can access the Earth's natural heat and use that as a way to produce geothermal energy. That's the idea.
Wow. Okay. Well, you slid it in there. That was nice. That was a really good transition. So you said there is geothermal work that you're doing with Montauk, but overall, could you describe what Montauk is, what you guys are doing, and this idea of the electron economy?
Yeah, of course. Montauk is a mostly venture studio. We're all venture investors. Some of the founders have entrepreneurial backgrounds. Our CEO was actually the CEO and founder of Casper, the kind of original D2C mattress in a box company in the US.
No way.
Yes. So I think
amazing.
he's an amazing resource to founders in the sense that he has done to a very high degree the 0 to 1 execution of a company in a venture scale. He led it through. He was a CEO from founding to IPO to sale to PE.
Wow.
So he's done that full life cycle very successfully.
Didn't they say at one point they wanted to be the Nike of sleep? Was that them? I don't remember.
I can't confirm or deny that. But,
okay, anyway, I thought those.
But I love Casper mattresses, I have to say. I was an user when I used to live in New York, and I was so sad that I couldn't get them in Germany.
Okay, so you guys.
Sorry, I need sidetracked. So we have him. He has co-founded a couple of energy businesses with one of our other co-founders, Evan. So they kind of had that venture building experience together, and they wanted to come at a venture studio with a bit of a different angle. They didn't want it to be matching co-founders or necessarily coming with idea. And a lot of those companies, like statistically, like tend to struggle a bit more and struggle to raise future rounds, et cetera. They felt like within the space of energy electrification, there was an opportunity to build a venture studio where the investors within the team were highly specialized in the space and had the expertise to get to do the 0 to 1 motion within the team first, get the business to a state where the technology and the business model was relatively fleshed out, and then bring on the right founding team to go scale that company. And we have an amazing head of talent who's really, I think, the core of helping us assess and figure out the right places for the talent that we do meet.
I just asked you about this and I already don't remember what you said, so this is good. How common is this model? Like, how many other people are playing in the space of market analysis, a good idea, develop to one, and then hire a team?
Yeah, there's definitely, like, I would say a handful of other incubators with this model that exist. I would say there's, like, the one that definitely comes to mind, particularly in Europe, is Marble, based in Paris. They have a great team specifically focused on climate, where they also have a similar venture studio model as well. And they are very focused on specific areas. We actually invest in some of their companies at Extantia, so very familiar with their process and team, and definitely think highly of that venture studio. And there's also a lot of other venture funds that will have a team. I would say I know of a couple of generalists in New York, for example, that have teams of an investor, kind of an incubation lead, and they do a combination of investing and incubating every year.
Cool.
Because I think with the investor background, you have a unique eye into what's working well in the market, what's not working, and where there's remaining white space to build something.
Okay, so tell me what this electron economy is.
Yes,
I don't understand.
Missed on that. Got too excited about the other topics.
That's okay. Okay.
Yeah, so the electron economy to us is really investing in the shift toward electrified, intelligent businesses. The way I think about bucketing it, to also give founders and other investors I meet a better idea of what we're building within, is, to me, if it's really anything that touches energy, resilience, adaptation, or efficiency, or any piece of the digital backbone that enables any of those buckets, it's probably something that we would look at or consider. And really, I think it's best if I explain the range of companies that Montauk has built. So Montauk has built and launched 12 companies to date in the last 2 years. So we're a small team, but we definitely move quite quickly.
Hey, cranking those out.
Yeah,
That's
really cranking them out. And we've built companies in space tech, we've built grid tech companies, we built this geothermal company, we've built a company in cryptography, we've built a company doing ERP systems. There's really such a range, which I think is quite exciting. It's quite an exciting spot to sit in, because we're really not limited and we can think about industrialization quite broadly.
Yeah. So then something I love talking about on this podcast with a range of people, because it's still, there's so, at least from my perspective, a lot of people have different opinions, but what is your opinion about the label of climate tech or clean tech or green tech, and why is it that you guys don't strictly associate with climate tech?
Yeah, I think we don't want to limit ourselves. Like, if it's something that is touching those areas that I mentioned and it's pushing forward our transition to electrified businesses, then it can be within climate tech, that it can be within what we call the electron economy. I think it's really about, is this something that is, helping the transition from hydrocarbons to electrons? Like, that's, I would say, really the core of what Montauk is. And we don't need to, because it is really beyond climate tech. Like, we think a lot about industrialization more broadly. We think about, like, robotics, for example, and other applications that are not specifically a climate lens.
Cool.
Which I think is the right route for a VC investor.
Okay. All right. So some questions that I usually ask people that are in the VC investing space have to do with, from a founder's perspective, how do you better understand what it means to position yourself to come into a conversation with you and talk about raising a fund, raising a round? And what things do you look for in a founding team or a company? And then how do you see people be successful in deploying the capital that you eventually invest?
Yeah. Yeah, I can talk about this more from the lens of my time at Exantia, since I was really focused on investing there. I would say, obviously, it's very dependent industry to industry, but I think really there's a couple of core skill sets that I look for in founders, regardless of what they're building. I'd say number one is really their storytelling capability. I think some people, there's obviously a training element where people can work on this and improve, and not everyone is suited for the CEO role, and not everyone is suited to build a venture scale company and play that game. There's many people who can build amazing sustainable businesses for themselves, but it might not be the right venture opportunity, and that's fine because it's a totally different game to play. So I'd say having that storytelling ability nailed down to be able to really sell your vision and get a variety of parties excited, whether that's investors, customers, potential partners, et cetera. I think it's really key. It doesn't matter what you're building. You need to be able to communicate that highly effectively and galvanize any audience you're talking to. Say that's number one. And I'd say kind of the second core piece that I look for is their ability to really learn at a high rate over time. Like, my favorite way to look at a company is to catch them at an early stage. Like, for example, when they're spinning out of university, have quarterly, potentially every 6-month calls with them to see how they're doing, be helpful when I can, and really use that as a way to see how they're progressing before I invest. Like, my goal always was to meet a founder 6 months to a year before I invest. I felt like if I met an amazing founder at the time when they were raising a round as a seed investor, like, I messed up. Like, there was something in my sourcing where I wish I would have caught them earlier to be able to see them along that journey. I think that's really important. And then I'd say the third piece is coachability. Are they, not the third, another piece is is coachability. Are they able to take on feedback? Are they defensive? Are they collaborative? Like, these are really the key things. Like, it's a really long relationship. It's going to be a 10+ year relationship likely with a founder. You need to see that earnest ability to take on feedback and take it well and not act defensively at an early stage. If you're already seeing that in the time that you're assessing them, it's probably not going to be the right fit.
So on that second point, you talk about learning. What does that mean, actually? What does it mean that someone, if you've been following for a year and you've had 2 or 3 calls, and you can say, like, this team is successful in being able to learn and this team does not?
Yeah, I think, for example, if maybe at the time when they're spinning out of university, they are looking at one kind of like beachhead market as their segment that they think they're really going to go after from day one. They think it's going to be the best market use case for them. They end up actually spending more time with that market and realizing, for a variety of reasons, that it's not the right fit. Maybe they're just a bit too early. Maybe the customer doesn't actually really need it today. Maybe they can't come to agreement in the right contract structuring model that will enable that company to scale. And they recognize that, and they're not too headstrong to think that they can make it work regardless, and they pivot to be able to find product market fit. I would say that's an example. Like, things like that are what I like to see. I don't really expect any pre-seed stage company to have everything exactly figured out and to not change anything by the time that I would invest at seed.
But it's just that progress.
The progress. They've progressed the company in a way, taken external feedback from other investors, customers, et cetera, other team members, and made changes in real progress in a way that is better for the business.
Cool. Yeah. So then the second piece, after you've watched people learn, after you've given them really harsh feedback and receive it very well, and you say, okay, I want to do this, you invest. What are some before we talk about the studio and everything? What are good ways and bad ways that you've seen capital be deployed in this space?
I think I think something in terms of a good way, this is something we always talked a lot about while I was at Extantia. We'd love to see what we call capital efficient founders. That was something we discussed a lot. Like, did they use their money in a way that was highly useful? Were they spending it? I don't think we saw this as much in Europe, but like, were they spending it on, like, let's say, for example, like lavish parties, or were they spending this to, especially as mostly, I would say, like hardware investors toward the early days of my time at Extantia, were they using it to really figure out the best way to showcase progress of their likely like hard tech product that was going to take several years to scale up? Or were they using it in a way that was not the best use case? Are they paying themselves meaningful salaries that are not too excessive as well? That's something you're also, I would say, looking at the time of an investment. We want to see that they're doing things in a way that's showcasing scalability in a way that makes sense to unlock the milestones needed for the next round.
Okay.
And being really just laser focused on those milestones, I would say, beyond anything else. Yeah, and I think if they're doing really anything beyond that, it's not going to look well for a future round.
All right, so let's go back to the venture studio thing, 'cause that's something that I definitely care about, something I think is very interesting, and something I wish was a lot more popular in the world. So just remind me how you guys approach it, how it operates currently. I don't know if you could talk about, like, at what point in your research you decide this is a viable thing to go for,
Yeah.
and now we enter X stage where we do, thorough discovery, and then we have a hard cutoff, or we hire a CEO, whatever that is, and you can use the geothermal company as an example.
Yeah. Yeah, I'll say, like, it's definitely differed across companies what we do. We don't necessarily have a hard and fast process for company building, but I'd say the general approach and the approach that we took for geothermal, like, and it's really like, I joined Montauk specifically to help them, to start my time with them, to help them build this geothermal company. It's a space that, as I mentioned, I had been excited about for a long time, looked at a variety of companies in this space. So I had a relative idea of kind of the profile of company that probably would be best to build to create a venture scale business in this space. From my perspective, just to give some guidelines, that was likely going to be a developer with a significant tech edge for sure. And then it was likely also going to be an EGS company. I felt like that was really what was taking off, was the most scalable, again, taking advantage of our existing oil and gas workforce in the US, et cetera. So those were kind of the general parameters. And we started the process by talking to really every company in the space. So we wanted to, and these were all companies that I already had existing relationships with, wanted to understand, one, like, what was the latest on them? What were they working on? Any recent milestones that they progressed? Anything surprising that happened? Really key technical updates. And then beyond that, the second piece we always like to discuss with them was, if we were to build a company in this space, how could we best collaborate moving forward? And then 3, which I think is really the most important question to assess with people who are really working at the forefront of their space, is, where do they see the meaningful white space to push the industry as a whole forward? That was really the lens with which we approached building this geothermal company, and I think it resulted quite well. And we got the company, we talked to a variety of existing founders, we talked to experts, we talked to other key investors in the space, some who are specifically just focused on geothermal, for example, that have been really helpful resources, I would say, throughout my geothermal journey. And we got the company to a state where we had some outline and, like, really key ideas for the tech strategy, I would say, but also wanted to allow for flexibility for whoever the CEO coming in was to really put their stamp on it and push the business in a way that it was really their business. And then we also had some key ideas around the business model as well. Started socializing that, started asking our existing connections who would be really the best people to talk to for talent in the space. And eventually we were, by actual multiple people, were introduced to who is now our CEO, Mike Matson. We met him, I think, just a couple of times. It was very clear he was an amazing fit and we need to convince him to join us. And he ended up joining shortly after. And then he was really the one who brought on the rest of the team based on his outstanding existing network, which is not always the case. I would say it's often a bit more heavy lifting on Montauk's side to find the right key talent. But this was kind of a unique case where our CEO just has that in multitudes, was able to do it himself.
So when you were doing that initial that research, talking to people, you were talking to companies that were already leading in the space, and then also potential buyers or customers or industry partners, and then also investors, and then other people, like
Exactly.
across the board.
We looked at we talked to everyone across the geothermal space. We talked to power production company developers. We talked to tech providers. There's so many in the geothermal space, like, people like the Hefes of the world doing high temperature sensors and electronics. We talked to Terraferno working on flow control devices. We talked to Critical Energy doing kind of a new type of surface turbines that are more optimized for geothermal. Really everyone across the geothermal landscape to understand what their key pain points were and really what's needed here today.
So I'm without understanding more deeply, I guess, what the specific company is, the value proposition, I'm assuming it's a novel technology or at least an approach. Is there any patents involved? Like, do you guys set all of this legal, financial structure together and then hand it to a CEO and say, scale this? Is that how that works?
I would say it's a bit more collaborative. Like when we're meeting with different experts and then eventually kind of founding team member candidates, we present our current thinking to them with the intent that they should have their own perspective that likely challenges us, makes additions or edits to what we have. We want it to be something more collaborative where they can really put their stamp on it on the end and say, this is my company and I'm super excited to build this.
All right, great. That was a great run through. I appreciate that. So they're just yeah, so we do that. Okay, so then outside of geothermal, even though I am interested in making this just extremely technical, specific geothermal market research, what, I guess, with the work at Montauk, where are you guys pointed? Where's your focus? Where's the future headed for you guys?
Let's see, there's a variety of companies, I would say, in the works really at all times. Like I said, something we're excited about definitely is robotics. I've been spending time there. I think there's a variety of different business models that one could pursue in robotics. You could be a horizontal player, maybe integrating a variety of customers with the right OEMs and figuring out the right robotics configurations for different customers. You could be a verticalized player, really with a very specific moat and wedge, solving a very specific customer need. I would say likely to address labor shortage problems. That's something that we've been spending time thinking about what the right company build is there. For example, I would say we're always excited about space. We've seen our company Mantis Space that Montauk launched, I'd say a little over a year ago, has done quite well, and really pushing forward the space tech economy forward. That's a space I think we'll continue to think about. We also recently launched a company called Perimeter Compute, Edge Compute, really at the metro edge, specifically in commercial use cases in cities. So lots of things happening at Montauk.
So as it goes with this space, there's also companies that form and bets that you make that don't work out.
Yeah.
So is there a notable example of something that you felt like, or the Montauk team was really excited about, that ended up not working for one reason or another?
Yeah, I think it's definitely the nature of, I would say, the companies that Montauk has built so far, they're all progressing in a way that we're happy with, but obviously it's still early. So let's see where that lands. But I think part of the venture studio process is definitely coming up with ideas, just throwing so many ideas out there and discussing them and debating them as a team, getting buy-in from, I would say, the partners, getting buy-in from other team members, and really like stress testing that idea at the early stage. So there's plenty of ideas that get thrown out and we realize, you know what, the market size isn't big enough for this. This is probably too niche, not really a venture scale idea, or maybe it's betting too significantly on tailwinds that were kind of on tailwinds that might not continue to persist in the way that they are today. Or maybe it's a great idea, but we can't find the right talent for it today. So we kind of shelve it for now. I'd say there's a variety of things that happen. I think it's just the nature of a venture studio.
Are there people that you come into contact with? Because there are certainly these people out there, at least online, that I've come into contact with that aren't fans of a VC studio model, or the role that it plays in the ecosystem or whatever.
Yeah, I mean, I think it's definitely a different model in the sense that we were building because we're doing the initial stages of company building and finding the right founding team. We're inherently taking ownership in a way that a co-founder would not have to deal with if they were founding a company themselves. So I think the piece of ownership is just a different profile. Like, we're also kind of a co-founder of the business in a sense, and we are so involved with them in the early stages that it's just so much of our time versus a traditional VC investor doesn't need to spend. So it's a different mindset for, I think, a founder coming on. Like, if they feel so galvanized about building a business themselves and already have an existing idea, they're probably just going to do that themselves and aren't going to have a VC take equity from day one when the company's incorporated. But the benefit of that is we can bring on founders who maybe didn't want to take on that risk themselves, in the same way that a non-incubated company would have to take on, I would say. And they also get our network and advice from day one. They get experienced investors, so they don't have to fight in a way that I would say other founders might have to when they're raising a pre-seed. Like, we'll do the pre-seed, that's done. They already have capital in from us. Then we'll bring in external investors for the seed.
Is there any consistency? Because, like you said, there's a lot of different spaces that you guys are operating in. Like, bah, 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 bah.
Yeah.
But is it fair to say it's all relatively deep tech? Is that a label?
We're not. No, I wouldn't say we're a deep tech fund. I think we've built a variety of companies. Some are software platforms, some are software-enabled hardware, some are deep tech companies. Like, I mean, there's space-based solar. We have a company called Gridvar that's working on a grid intelligence platform. That's a software-only platform at the moment. We have Birch Geothermal, which is a tech-enabled EGS developer. But I'd say it's definitely a variety of profile of companies. And generally, we always have a lens of scalability. So we want to make sure that we're investing in companies with, I would say, reasonable time horizons, and that really align with the venture scale.
Okay. Well, the reason I ask is just I'm curious if across the companies that you either invest in or start, you say you're very hands-on at the beginning. Is there any consistency with the things that these different companies are working through, or does it vary? Because if it's deep tech, a lot of the early years are very aggressively developing the technology with the idea, with that beachhead market idea in mind. But as you progress the technology and stress tests and it changes, that always moves. But if you have, I guess, some kind of software solution that might be further along in its development, then you can be more aggressive at customer acquisition.
Absolutely.
Like that. So is there consistency across the number of companies, what you are very hands-on in helping companies with, or does it vary pretty greatly?
I think it definitely varies, but there's a couple of core things that we are very hands-on with. I'd say with every company. I think with like helping with their initial early hires, that's something we spend a lot of time thinking about and working through with them. And also their seed fundraise. That's something we're also very hands-on helping them think through the right materials that should be included in a data room, for example, the right way to engage with investors, the right investors to engage with. We'll do intros within our network that make the most sense for founders within their given space. And I think the fundraising piece is a piece that any founder or first-time founder likely needs to learn quite a lot about. And we've brought in founders through our studio that are not first-time founders, so they have experience themselves. But I think the fundraising piece is really, we're bringing people in that are experts in the space that we're building in.
Cool.
So they typically need less help there and more with the VC landscape, I would say.
Okay. So one more for you before we get to my two favorite questions at the end.
Yes.
A lot of the content and a lot of what we're doing at Earth Onward and The Grove is very heavily go-to-market focused, talking about like orienting a product with a population in the world that you can actually work with and things like that. In whatever way you want to take the question, how do you see companies at these stages be successful from a go-to-market standpoint and not successful?
I guess one piece comes to mind in particular for companies that are a bit more asset heavy is, I think, from a go-to-market perspective, like one, making sure they personally have deep relationships with the customers they're selling to, and then two,
pre-existing or
ideally pre-existing. We're bringing in people who are really experienced experts in their space with like likely decades of experience, and they, in theory, should have the network to really have those relationships established and bring us on board with the go-to-market strategy they really want to pursue. So I'd say that's one piece of it. And then I think for any hard tech investor or any hard tech founder, I would say it's doing something a bit more asset heavy today. It's really beneficial to the company and to early stage VC equity investors if they can figure out structures that are not as dilutive for them and also not as dilutive for VC investors. So if they can figure out JV and offtake structures, for example, and not have all of venture funds equity going into actually building the product and really keeping it more at like the IP kind of trade secrets level, I would say, in the topco level. I would say that figuring out how to bring in project finance earlier is something that can really help accelerate go to market and also help retain equity for earlier stage investors. So I'd say that's something that works quite well for early stage. Yeah, early stage, especially more asset heavy founders.
So cool. All right. So with the work that you're doing at Montauk right now, again, however you want to take it, but I guess you're very heavily involved in the studio space. So what is the biggest hurdle that you're facing as far as growth or development in the space, and how is it also an opportunity?
I mean, I think when we first build any company and like officially launch it out of stealth, for example, the main goal after that, it might not happen right away, but I would say in the current state of the investing world is that investors, even at seed, expect some level of customer traction in a way that was not expected, let's say 2 years ago. Like companies could raise a seed round with an amazing story, amazing vision, amazing technology, and not have book traction yet in a way that is typically much harder today.
Interesting. Okay.
It's not necessary in all spaces. I would say things that have AI attached to them in some way don't necessarily face that hurdle as much. But I think a lot of companies have to be just more, I think with that, like the go-to-market piece that I mentioned, more creative and more like really pushing the boundaries of what's possible in their space to get some type of traction earlier. And maybe it's a unique partnership model with a particular customer that will eventually convert into a large contract, but something in place, I would say at the time of seed, that is typically, historically, like has not needed to happen. And it's something that I think is increasingly expected of today, but that's certainly an opportunity for companies as well. I think it's really forces them to think through the like go-to-market and financial structuring boundaries of relative to what other companies in their space had to think through 2 years ago. So I think it's ultimately going to result in better progress for those companies.
That's really interesting. I have a bonus question just because you technically asked yourself, and I am curious, I guess, for your personal growth, if there's any hurdles that you're facing and how they can also be an opportunity?
I wouldn't say any particular hurdles. I think just it's part of why I love doing VC investing and why when I first learned about the role and realized, oh, I'm just getting paid to learn new things and really just kind of scratch the curiosity itch in so many different avenues. I think it's sometimes a hurdle, I would say, starting the process of learning about a new area just because there's just an infinite amount of information to cover about a new sector, for example. But I don't view that as a hurdle. I view that as quite exciting. It's just a different amount of information to uncover relative to other industries that I have more context in. But I think to me, that's the beauty and one of the most exciting pieces of the venture model, that you just get to explore all of these spaces and meet amazing founders and other investors who are really at the forefront of it.
So much opportunity.
So much opportunity.
All right. So with all of this opportunity then, and this work, this infinite work to be done, curious what inspires you?
I think for me, it's always been I've always wanted to be a part of kind of pushing the technical boundary of what currently exists in the world, whether that's from a software perspective, whether from a deep tech perspective, and also and I think for me, where I've found my personal niche is being able to, one, be very excited about specific spaces, connecting the right people to eventually find the right founders, and really support them in a meaningful way. And I think the thing that really inspires me most day to day is always the founders. I think, especially during my time at Extantia, I could be very maybe was up late, working on an investment memo or something like that, and was a bit more tired that day. And then I have a call with just this really outstanding founder who is bringing me on such a journey of what they're working on and thinking about a solution in a completely different way that I think is always just super exciting, and always felt very grateful for that.
Wow. Well, I feel the same way. I get to talk to similar people, including you, on a weekly basis, and I can definitely share that it's very inspiring. I was actually it's funny, I was talking to one of my friends yesterday, and I told them that at the end of each episode I asked that question. So then they asked me that question, and that is exactly an example that I gave. So I hear you on that.
Yeah.
If anyone else was excited or inspired about your journey at Montauk, what's the best way to get in touch or follow along?
Definitely LinkedIn. Just message me on LinkedIn, Elisabeth Iszauk, Elisabeth with an S instead of a Z. And you can see my last name, I assume, on this podcast episode. And yeah, just message me and I'll get back to you.
Awesome. Well, thank you so much for your time. I learned so much. I'm going to go back to Philly and start Venture Studio tomorrow.
Yeah, let me know. I can be an advisor.
Awesome. Well, thank you.
Awesome. Thanks for the time.